Yeah, it's okay, yeah.
Okay, guys. Good morning. Very good morning. Okay. So, as we planned last month, I told that last month also. This month, accounting fundamental. Our subject is accounting fundamentals. So, we are dealing with numbers. Am I right? Hmm? Yeah, okay. Basically, we are dealing with numbers in this month. So, I have invited Sina Moini. He is an instructor of CICC and my former program manager. Okay, he is the person give the opportunity. I told that many times. My class students know about well because thousands of times I mention your name in my class. So
I'm already famous then, I see.
yeah.
Nice.
So he's the person gave me the opportunity starting teaching in Canada. Okay, for me. Okay, so the first person. So thanks for you the opportunity. Today, special event organized for you. So today expectation is investing fundamental. As a student, okay, you guys are students, how we can start investing. Here in Canada, there are multiple options. There are many opportunities are available in the finance industry for investing. Clear? So today's session basically focus for how we can start investing as a student. Okay, so thanks for accepting my invite, and
My
it's a
pleasure.
good opportunity for the morning class students. Evening class students, definitely they can get the opportunity, but morning class students would able to take that opportunity. That's why I am asking from the Sina to deliver or whatever the expert knowledge with my students to how to invest in Canada. Okay.
Thank you so much. Guys, thank you so much for coming. I believe we have two classes here, right?
Yeah.
We got two classes. Awesome. So some few faces I see very familiar, and some, well, actually many are so new. So thanks for your time and thanks for your interest for this awesome workshop. You know the reason why I chose this investment, I've been doing it like for a while, really. Because I've been actually doing it myself seriously for the past 15 years into the capital market. With the raise and fall, I'm totally familiar. I have taken so many risks. I have done so many losses. I have gained so many profits from this market. And I think something in Canada that we should notice is like, as a student, we have this potential opportunity to start investing, but we got no idea. And thanks for taking that survey, by the way. I was taking a look at that survey, and I realized that majority of us has not yet started with the investing. I see that emergency fund or the saving, like the key questions. I was just getting familiar with your attitude and mindset, not yet. I see how much money do you think is needed? Well, because some people still believe that, okay, I need substantial amount of money to start investing, but looks like that majority of you believe that with less than $500, it is possible. So let's just get into this thing. And I would like this session to be as interactive as possible, please. So in the meantime, while I'm explaining things to you, I would like everybody to ask me any question from your background. Let's just share some experiences. Your fear, let's just share with the class. Your challenges, your doubts, and this is what certainly I'm gonna answer everything today. So mainly I'm gonna focus on why to invest, where to invest, and how to invest, and I'm gonna focus in Canada, like our lifestyle in Canada, our objective in Canada, and the period that we are living here in Canada. Okay, so it's very simple, because if people ask me that, okay, why Sina you are investing, or why have you been investing? Because I know one fact, and the fact is that every single day that I'm waking up in Canada, in US, back in Middle East, everywhere in the world, the value of my money is depreciating. The value of my money is depreciating. And we know that if you are buying a cup of coffee today for, let's say, $1, 2025, suddenly you guys are gonna pay more in 27, in 28. So the first lesson I realized was that every single day or every single year, my money is depreciating. So the question, human beings are always concerned with future. The question is that, okay, how I can control this? Can I control inflation? Because in Canada, in US, back your home country, prices has always been going up. So the question is, can we control? The answer simply is no. So let's not get frustrated. The question is, we can manage it. Like, okay, we can manage inflation, but how we can manage inflation? Is it like, should I go and buy crypto? Should I invest on real estate? Should I keep golds? Should I keep money under my pillow? The answer is, depending on every single person in this class, everybody listening to us from YouTube around the world, people are living in this country. There are different mindsets, there are different choices, there are different objectives, there are different goals. So today, I'm going to share with you the least thing that every single one of us should adopt into our lifestyle. Whether we are concerned about our future or we are already millionaires. I'm not going to ask you to raise your hand if you're a millionaire. Otherwise, I'm going to ask you to call me, please. So the question is, if you just keep $1,000 under your bed for 10 years, do you think this is going to worth, how much this is going to worth today? Like, I'm sure that every single one of us has some saving account in a bank, with any bank. In Canada, back in your home country, we have had it for many years. And we didn't notice that the interest that we are receiving, 2%, 15%, 50%, depending on the inflation in any country, is not even sufficient in order to beat the inflation, which means that inflation has already eaten the value of our money, and this is so frustrating. And still, I cannot talk with the president or the prime minister, oh, what are you doing with the value of my money today? So can't you just take control of the economy? Or no, we cannot. So every individual has its own decisions and choices in terms of controlling the value of your money. Let me just share with you a very amazing fact about compounding power. Anybody knows about compounding? Have you ever heard about compounding? Compounding effect? Okay. Not yet? Okay. So I got two options. Who wants to get $2 billion cash today? Or option number two, I will give you only $1 today, and for the next 31 days, just 31 days, I will double it. It is like today I'll give you $1, tomorrow I'll give you $2, the day after I'll give you $4, and then I'll double it. So who wants option one? Like $2 billion cash? I don't have my checks with me, but so I can promise. So, anybody? Nobody likes cash. Oh my gosh.
Probably the $1, if you do the math, the $1 doubling it and doubling it and doubling.
Yeah.
And that means doing the compound.
Yeah.
Like compound interest is interest over interest.
Right.
Over interest.
Right.
So probably the $1 at the end of 31 days is more than $2 billion. But, however, the value of money today, not in 31 days, the $2 billion, I could use it, I don't know where. If I knew, I wouldn't be here. But the $2 billion, you can use it somewhere. And in 31 days, maybe they'll have 2, 4, 6, or 8, or whatever, if you do a good investment.
Okay. Well, I'm happy we got a finance expert over here, so I better actually see it and then listen. That is really great. That is really great. So the thing is that for those of you who said, okay, $2 billion for sure, in bracket, you probably have so many ways of utilizing this $2 billion. and probably have your own plan or strategy. But when I'm telling you, okay, I'm gonna give you $1 and then I'm gonna double this, so definitely you guys are gonna have $147 million more. $147 million more. So this is like I'm giving you only $1 and I'm just doubling it for 31 days. So let's review the lessons. From one slide, I can just share with you 3 or even 4 very important lessons that you must adopt in your investing. First, invest as early as possible. Invest as early as possible, because every dollar you and I are investing 0 time, we call this today, will have, working on compound basis, will have more value. Hello? It will have more value in the future. Tomorrow, day after, 1 year, 40 years, I can show you. Lesson number 2, consistency. Hello? Consistency is a principle. It's in my DNA. It is like, when it comes to investing, I always believe that just putting $1 or $1,000 or $10,000 today won't be enough. No, I must be committed to my plan, to a financial plan, so that I can contribute towards this $1,000, to this initial deposit, so that my money can enjoy more growth, faster growth through the time. Okay, so lesson number 1, invest as early as possible. Lesson number 2, consistency. Just add to it. Just add to it. It doesn't matter that you don't have money. You always have $50. You always have $100. If you don't want it, just put it towards that investment, whatever that is. We will discuss. Lesson number 3, take risk. I love it. Take risk. I'm a risky person. I love making mistakes. By making mistakes, I know those ways that are not working. So by far, I know millions of ways that are not working. And if I want to compare myself with a person saying that, okay, my money is in my saving bank account and then enjoying 2 to 3% a year, which is so ridiculous, I would say, hello, you don't know the wrong way. I know a million of them. So I'm not telling you to just close your eyes and then jump into the deep water. I'm asking you to calculate and manage the risk, because risk has always been with us. It's here, it's just everywhere. So by taking a risk, you guys, let's say your money will enjoy faster growth. I can just show you. Let's say that, okay, you're gonna put your money for 2 to 3% in a saving bank account. So your money hardly is gonna get 2%. Like each $100 is just gonna get $2. $100 deposit today in Canadian bank account. After 1 year, it will be $102. You may say, wow, I got $2. But hello, the inflation is already 6%. The $2 is gone before you get it. So forget about 2 to 3%. I'm not asking don't have saving bank account. You should have it for your emergency purposes, for your saving purposes. We all need saving. We all need emergency. But some part of our money that we don't need it, and in long term we don't want to touch it, it should goes into some investment opportunities. I think I'm going to ask you if you please scan this code and tell me that where you would like to invest. Where you would like to invest. Where you would like to invest. Mm-hmm. Well, I'm seeing the live results here. It is like a stock price is going up and down. I love it. So, more guys, more. So, yeah. We got more than 23, so please. Mm-hmm.
I think Gina, majority of the students don't know the opportunities and what is bond, what is stock. So majority.
That's why
That's why. Yeah.
let's first see what's going on and then let's spread the knowledge. Yeah, makes sense.
Because when I was asking the question from the students, guys, what do you think about this investment? But majority of the students, they don't have an idea.
Right, right. Yeah. Okay. So, as you can see, well, hopefully your teachers, and then I'm sure that you have had access to some resources to get to know at least majority of these financial products. And well, by default, we already know what gold is, real estate is, crypto, and then stocks. Okay, perfect. So let's get back to okay. For your information, I'm going to go quickly talking about the stocks and shares because probably the nature of this workshop is like introducing the most famous financial products that we already know about it. And you are studying it in this month of accounting fundamentals. So imagine that my company, like I'm Microsoft, so I need money. You guys have the money. I need your money, so you would like to lend me your money. I'm borrowing from you. So in exchange for your money, I would like to issue some papers. And those papers are called stock certificates. And what does it mean if you got this stock certificates, like piece of paper? It shows that you own a piece of me. You own piece of Microsoft. You own piece of Oracle. You own piece of NVDA, whatever, I don't know, Teslas. So, and you can claim because you got some rights. And the history shows that holding those piece of paper or stock certificates or literally investing in a stocks, as you can see, well, among the other riskier or less riskier, financial products, has been high enough, at least for the past 5 years. So I'm here dragging a chart for you guys to see, and then you can compare. But again, I'm not asking you, just look at this and then get excited, say, oh gosh, you see crypto up or gold is up just for the past 5 years, or the stock of the XYZ company is up for the past 5 years, or even for the past 10 years, and then I'm gonna put all my money into this because I believe I will get the same growth. And that is a big mistake. History in finance, my friends, is just giving us a part of the factors or the evidences that we need to make a decision about the future. Everybody on track? Like, about the future. So if I want to trade, which I do, or if I want to invest, just by looking at this or the historical data, I'm not making a decision whether to invest, whether to buy, whether to sell, whether to hold. Okay? So you may ask what factors that I consider. But before I share with you some experiences, let's go through, I'm gonna show you some more charts, some more evidences about the historical data and then the historical return? Well, luckily, cryptos, in particular Bitcoin, not all cryptos, just Bitcoin, and for the purpose of comparison, I'm just quoting over here, you guys can see, okay, for the past 5 years, 97, 126, 1,211, 20%, 128, and then the rest. And the GIC is just a saving with the bank. Guaranteed investment certificates. Guaranteed investment certificates. So, looking at this now, I'm going to show you in particular, like I said, S&P, Standards & Poor's, which is an index showing the average price of the 500 American largest market cap companies. American largest. So we are living in Canada. I'm focusing on American capital market, honestly, because it has enough volatility and it is volatile enough. So the gains and also the Canadian capital market is depending on the American one because of some of the economy factor that I can share with you. So we are going to focus on the American capital market, which is very easy for you guys to start buying and selling American stocks in Canada. Look at this. Stocks for long-term investing. For the past 5 years, just for the past 5 years, guys, you can see some of the famous giant companies, including the average price. Again, S&P is the average price for the past 5 years, but you guys can see still for NVIDIA, Microsoft, Tesla, and then Apple. Look over here, you see the percentage of the growth. And then needless to say that, are you still comparing this with 2%, 3% given by the banks to your very precious $1? Really? So the question is, 2021, you ask myself, where I have been? What did I do with my money? 2021, NVIDIA was $1 or something. But you see the jump, Jan 2023, up. The blue is NVIDIA, 1,224, just NVIDIA. So $1 invested 5 years ago, $1 invested 5 years ago would give you today more than 1,200% return. So this is like a wake-up call for all of us to see that, I'm just taking a look at the history. What have I done? What I should have done. And also, even if you bought ETF, exchange traded fund, which could be a basket, like some of you may say, okay, I don't want to put my money in one share. I don't want to put my money in Tesla, Microsoft. I just want to invest in a whole market. So the risk is controlled. I would say, okay, perfect. Why not? You can just buy SPY that represents S&P. So that at least you will have, again, more than inflation and reasonable, managed risk, reasonable return. Reasonable return. Any question for now? So by far, stocks are the most famous, are the most important investment for students. Stocks are the most financial security for the long term because once you hold them, there is no loss. Even if it goes down 40%, still you hold them, no loss. But when you sell it at dip, the loss will be realized. You know what I'm saying? So it is like, as long as you hold your long-term investments, your investments are safe. But once you are that market is bloody and then, oh my gosh, I'm going to sell it, I'm going to lose everything. But once you sell it at the deep, this is going to be a realized loss. So you may say, oh my gosh, that $1,000 is seriously gone. Can I share with you two elements that bring misery to our life financially? Two elements coming from our psychology. Two elements coming from our psychology, and as human being, We seriously have to control them. Anybody, any idea?
Actually, I want to talk about do we need to pay for the tax here?
I will explain. Definitely I'll explain, because tax is our concern. It's my concern basically too. So those two elements are fear and greed. Fear and greed. Very dangerous. Very dangerous people. You have got to seriously take control of these two, fear and greed. Because when you have a fear, you see that, oh my God, it's going down, so you gotta sell, you gotta sell, you gotta sell, you gotta sell. That's why we call it sell-off in the market. And greed is like everybody buying. You say, oh, everybody buying crypto, I'm gonna buy crypto. Everybody buying land, I'm gonna buy land. Everybody buying gold, I'm gonna buy gold. What I do, when I see everybody is buying, I stop. Sometimes I sell. When I see everybody is selling, I always buy. Because market is giving me an opportunity. Sina, get into me and buy for God's sake. Like today, $99 Netflix. Today, 180 NVDA. Tesla and Apple. All the market is offering us, come and then buy. Let me just quickly show you something of a...
Sina, sorry for disturbing.
Yes, please.
So now some students, okay,
Yeah.
so they believe when I was talking with them, because they think about why we need to invest in Canada because of we are going back our country. Okay?
Right.
So some students think about that, but it's a, whether they are here or their back country, they can do it.
Yeah.
So when you do your speech, the presentation, please explain it to the student, because I think it's better understanding for the students whether they are here or their back country, they can do it.
Yeah, sure. Because there is one chapter left is still like how to invest, where I will explain and then give you some hints, like which platform to use in Canada and what accounts that you need to open as a student, and then how you can still take control when even back or when you are living or you want to continue, living in Canada for sure. So market is telling, let's get in. This is happening after today, Vancouver time, 9:30. Because every single day I'm waking up 5:30. Every single day my job before 6:30 Vancouver time when the market opens is scan the market. This is my job. And then I already done my training before 9:30, because before I come, I said, okay, 9:30, let's finish. So because timing for market is really important, especially this is Friday, okay? So, by the way, this is TSX, which represents Toronto. I can show you the US capital market. The technology today has also been S&P, yeah, there you go. Still I see green. Like this is today, because market is open now, and so you can just see companies that are offering us, let's say, start buying it, and on and on. Okay, let's just move on. So, next, the latter one was for the past 5 years. For the past 5 years. This is from inception. Like from September 85, Microsoft. Sometime in 2000, Tesla. Also NVDA. You guys can see. Can you read these numbers? I cannot emphasize that if, or probably we gotta ask our parents, like September 85, if you had $1, what did you do? Or still 2010, hello. Or still 2020, hello. We were around, we had some money, but looks like that we missed the opportunity. I don't want you to miss the next opportunity in the capital market. I need you to be wise. I need you to make a decision. I need you to start investing as early as possible, because no government around the world will take care of the value of your money. 448,000%. Now, how to invest? That's a critical question. This is where I'm expecting a lot of questions. So people tell me that, okay, I gotta invest. I'm so interested in the stocks. I'm so interested in company share. So how can I start? Well, practically very simple is like, okay, how much money do you think or do you want to put into stocks? They said, I got no idea. Should I just work and work and work overtime and weekends and holidays to get $5,000 or $1,000 to be eligible to get into capital market? I said, no. $50, you can start investing. Everybody has $50, right? I got $50. So, hello, it's not like something, because probably we got this wrong mindset, or we have been told that, okay, no, you gotta have a substantial money to get into capital market. I'm telling you, no. You need as small as $50, step by step. So, but look, people say, okay, I'm gonna buy one share of Microsoft. The share of Microsoft today is 480 something US dollar. The question, I don't have $480 right now. I said, okay, there are some platform or brokers that can offer you fractional purchase, which means that it is like you go to grocery, you said, oh, I cannot afford buying 1 kilo or 1 pound or LB or 2 LB of potato. I said, I got money, $20. How many or how much potato you can give me? Still, you get your potato with any dollar that you get. So still with fractional, don't you forget this, fractional purchase, you can still get your shares. Doesn't matter you got $20 or $50. And so the platform that I'm gonna introduce to you, and many of them around the world offer this. So I'm not worried. I will get Microsoft share equal to $20 that I got. I got Tesla share equal to $50 that I got, in case that you are interested in individual stocks. Guys, you need budget, and I'm sure that your teachers definitely already emphasize that, okay, yeah, we have some assignments, go spreadsheets, work on Google Sheet or Excel, craft your own budget, balance income, expenses, cash inflow, cash outflow, surplus, deficit, blah, blah. Why I'm saying that you need to have a budget? Because first you need to have a goal, like what I'm gonna do in my life financially. Am I gonna save? Am I gonna invest? How I'm gonna use my investment? And I can tell that, okay, the average age here is like 22, 23, like gosh, if I were 25, I would have been billionaire by now. Seriously. Yeah, after 150 years of my age. So it's really critical that, okay, you guys have this forward-looking perspective. You gotta take a look at all the years that you have got. And all these years, like 40 years, 30 years, it's just a blink, but this is gonna give you a fortune. So we need a goal, we need a budget. I need you to take care of your emergency fund. An emergency fund, probably, we have shared with our classes, like, okay, what it is. It means that, okay, with this life here in Canada, or according to my lifestyle, how much money I'm just subsiding just in case of rainy days, just in case of emergency. Make sense? And I'm sure that everybody has it. So once I came over here in this country, my emergency was like almost $5,000 to $6,000 to $10,000. Now it is much more because my lifestyle improved. My lifestyle developed. And so fixed costs also increased. So like rent, utility, food, these things in my budget, this is what I really care. So I always set aside 3 to 6 months. This is called emergency fund. It is like, okay, $50 is okay, but I'm building this emergency fund because I'm gonna say, okay, I got this confidence to start investing. So with any extra money that I have, I can start investing. And hello people, life is not always like today. Life is not always like a student life. Life is not always something that, okay, I'm a new immigrant or what. No, your life and your lifestyle will definitely, certainly 150% will improve, whether you stay here or back home country. And that is why I'm telling you the first lesson I gotta repeat, you have got to start as early as possible. Risk. The question I always ask is, Guys, why don't you, because many of you already answered this survey, why have not you started investment before? I'm afraid of losing money. Million times I listen to this. I'm afraid of losing money. Oh my God, I don't know. I'm afraid. So, okay, let's go to a restaurant. To a restaurant you never been. I'm gonna show you a recipe you never tasted. Are you gonna tell me I hate this food? I hate this food before you taste it? Yes or no? I don't think so. You may say, I'm gonna smell, I'm gonna taste to see what my reaction is, to see my psychology, to see my physiology, to see my body reaction. Make sense? So you taste it. You have tasted so many foods that you thought you hated that. Okay, or in this class, who has lost more than $1,000 so far? Well, I'm not raising my hand because I'm such a loser, so I'm gonna keep my hands down. So, see? Nobody lost any money, and people say, I'm afraid of losing money. Oh my God, I can't understand this. How can you say this? Because this is building your mindset in your life. How it is possible that people are just looking in my eyes and telling me that I haven't lost any money, but I'm still afraid of losing it. I haven't set up my business because I'm afraid of losing it. You lose what? You lose nothing. Money, people, is a tool, not an objective. So as long as you and I are looking at money as an objective, we are such a loser. Yeah, we got to accept this fact. We are such a loser. Money is a tool for your dreams, people. Money is a tool for your objectives. Money is a tool for your goals. Isn't it? So I'm detached with money. I don't care how much I'm losing. I even don't care how much I'm gaining profit because I'm not chasing money. Well, probably because I've got this bonus session into my classes, I got to talk like for hours and hours about the money mindset and money management, which I hope we can have such a session later on. But believe me, in an hour or so, I got to talk intensively. So I'm just, guys, through the words at your face, please grab, try to digest, and for sure we are in touch for any question that you will have even after this session and as long as it takes. So risk is something that uncertainties and you and I cannot control, we should manage. So you put the money into the capital market that you don't need for some time, long term, 1 year, 6 months, or even more. Doesn't matter, again, in Canada, doesn't matter everywhere in the world you guys are living in. This is not gonna, if you lose it, if just 1 in a million you're gonna lose it, your life is not being demolished, damaged, ruined, shaking. So you're still safe. You see that? Oh, I got my emergency, I got my saving. All right, now what I need is just putting $50, $1,000 into the stock market. So it goes down, up, roller coaster. I'm totally fine because I'm not gonna touch it. I'm not gonna just call the capital market. Hello, capital market, how much my share is today? Tomorrow, hello, capital market, how much my share is today? No, we don't do it, people, because you're long-term investors. You just put money, forget about it. You just add to it. All right? So when it comes to risk management, I'm a fan of, you probably heard this a million times, like diversification, diversification, diversification. Like, okay, don't put all your baskets, don't put all your eggs in one basket. That I got familiar with it like long ago, but I was idiot. I didn't use it up like many years ago. People told me, don't put your eggs in one basket, because I said that, okay, what if I put it? I did it and I lost it many times. So, all right. Diversification. So let me just quickly review so far. First, as long as you have SIN number, as long as you are students in Canada, you are all eligible to invest. Second, how much I'm going to invest. You can start investing by as low as $50. What product as a student is suitable for me in long-term investing? Definitely a stocks or exchange traded fund or ETF. So you may hear that ETF is stocks, ETF is stocks. Imagine that instead of putting my XYZ money into one share, one company, I'm just putting the same money into some companies, some industries, some sectors. So Microsoft may go down, collapse, but at the same time, Microsoft, Tesla, NVIDIA, blah, blah, don't go altogether down. So the more diversified this basket is, the less risk I will tolerate and bear. Any question? No? Yeah.
I heard that for example, this is a Starbucks company and it is Starbucks like drink. You put money for a Starbucks like every day $6 US for the drink, and we have $6 USD for Starbucks stock. But
Yeah.
in 20 years more, we will see the profit of this stock. But I don't understand, like we need to put like every day or monthly.
Yeah.
Yeah. So how can we like deposit it and how can we pay it?
That's very interesting. Speaking of Starbucks, by the way. So, okay. I like that mindset because that mindset is dictating to me that, okay, you said instead of buying a coffee, or I can just put some coins there. But you know, where I'm putting coins, you know the piggy bank that we used to be child and then parents used to buy for us and said, okay, put your money over there. But nobody told us that, okay, fine, kitty, put that over there, but those money is not gonna grow. Because they didn't know about the value of money. They just thought that accumulation of money itself is a profit. Of course, this is a very first brilliant lessons in savings, no doubt about it. But if you want to teach a 5-year-old kid how to start investing, it is like work with this money. My first rule of money, everybody, is like, if your money don't flow, your money don't grow. If your money do not flow, your money will never grow. Your money stay in a saving bank account never grows, people. Stay in a bank account never grows. The money should move from one market to another market. The money in capital market will move because companies improve their operation. Companies improve their profitability. That is why their stocks will go up. Make sense? Yeah. So looking at the Starbucks, I don't know, you may go to Costco, you may go to Walmart, and we got no idea that all of these stocks can be purchased with as little as $50 or $100, and then all of them historically been profitable. How often do you guys buy from Dollarama, by the way? And we believe that, okay, we are the winners because I'm just getting 50 cents, $2. Oh yeah, these guys are sustaining a loss. But I'm telling you, oh, TSL. Dollar Tree. TSE. Yeah. Yeah, for those of us who believes that Dollarama is just giving away their products. If I invested in 2015, just one share, 17 Canadian dollar, it would be $200 for now. Yep. So the point is, okay, now, I got the money, I got the plan, I got the budget, I got everything seen up. Where should I practically start? Because we all need to put this money somewhere. So if you go to a bank, you make an appointment, the financial advisor is sitting with you, is asking lots of questions. How much you are earning per year, what is your situation in Canada, blah, blah, blah. And then according to your answer, they will plan for you some kind of a very amateur financial plan, and then they will offer you their own mutual fund. Like, okay, banks are not allowed to buy us stocks. That is why I'm telling you, you should start and then experience investing from today. Don't let bank steal your money. I'm asking. So you need a broker. You need an application. So you probably heard them. Is there anybody here probably starting trading already with them? Any? Okay, good. Okay, which is good, because I'm going to introduce you the most famous Canadian platform that is so good and user-friendly for all the students, so good and user-friendly for everybody living in Canada, beginning their investment journey. Any name do you know? Wealthsimple. Wealthsimple. Who has got it? Who has got it? Awesome. Awesome. Okay. Well, actually, it was not the first day, but the first week I came to Canada, I didn't have a job, but I opened a TFSA in Wealthsimple, and today I'm a premium customer. So I have complete trust. They are in Toronto. Well, I'm not promoting this because they don't unfortunately pay me commission. If they paid me commission, I would earn millions by now. Why I'm shouting out this? Because it's super user-friendly. Super user-friendly. You can just install it on your phone, whatever phone types of phone you got. But sometimes if it is not working, maybe your phone is registered outside of Canada. You should figure it out from the setting or else. I have a Telegram channel I can share with you. It is where I will answer everybody's financial questions. And then this is where I promote this Wealthsimple. But they are so big because they have billions of dollar asset under management. And if you search their YouTube, once in a while, they promote their product. I have been doing varieties of investment with them, including ETF, shares, and also options. And recently they say that like a month ago on their YouTubes, and then I was seeing it live from Toronto, they announced that, okay, like option purchase is just zero commission. And for me, that I'm a frequent option buyers and sellers, it's like, wow, it's zero commission. And for your information, zero commission on the stocks. Because probably, if you get back to any of this, I worked with Webull, TradeStation, one of the main brokers that I've got is IBKR, TradingView certainly is my charting, and CMC long ago, but all of them are charging you with commission. More importantly, they are a little bit complex. But the Wealthsimple interface is very simple, is very user-friendly, and for all of us is very cool to navigate. It is like you don't need even help. You can ask me for sure, but you don't need any help. Okay, I can click on it and then it says next and next and next, and then bam, you're done. So what you're gonna do, you can install Wealthsimple, register, make a profile, open tax-free saving account, which I will explain quickly, tax-free saving account, and then you link your checking bank account with this. And then you can fund your account. $50, $100, I don't know. And then you can start buying when markets are open. Markets are open 6:30 a.m. Vancouver time until 1 p.m. From Monday to Friday, except for public holidays for Canada or for the US. But you have a chance to either buy Canadian and also US stocks. If you wish, after the class or later on, you can connect with me, and then I will sort it out for you, like for later days. If you need an answer or something, you got an issue or you got a doubt installing it or working on that, definitely. One thing I was going to tell you is like broker doesn't matter. But how we are starting this investing, it matters because it should be as user-friendly as possible that as a beginner, I'm just taking a look at that and I'm not getting frustrated. Oh my gosh, like navigating. I'm hearing some students are working with IBKR. Still, IBKR for me is a little complicated. They are one of the most sophisticated platform and big companies are using it. But why? You start with simple. We always start simple. We always have to start small because if you start small, we are starting smart, right? All right. I'm going to explain to you TFSA. I'm practically done with the slide, so we can start with the Q&A. What does it mean, tax-free saving account? Tax-free saving account. Everybody living in Canada as a resident, as a student, are eligible to open tax-free saving account. You know what, when it comes to taxation? First of all, countries like Canada heavily relying on taxes from us, from you, from everybody. This is their budget in their income, right? So Canada and US and these countries are giving us an opportunity that we can invest, our money can grow, but we are not going to pay taxes, which is a good news. Because basically, let me tell you that according to the taxation law in Canada, if I buy a stocks for $10 yesterday, today I'm selling it $20. How much gain I've got? $10, right? $10 yesterday I purchased, $20 I'm just selling it. So $10 is my gain. This $10, 50% of it is taxable. Only 50% of your gain or capital gain in Canada is taxable. And then you can take a look at the federal tax rate or provincial tax rate to calculate your taxes. You can do it online. There are so many websites that can help you. Well, I'm not going to get into taxation for now.
Your example is clear. When you make a profit, you pay tax on that profit, 50%, as you said. If you make a loss,
Yeah.
do you deduct that from your tax?
That's a great question. You know, losses, like capital loss, can be carried. Imagine that you have a net capital loss. Like during 2025, your investments, but sold investment, guys. I'm not talking about the investment that you're holding and it is red. You have to sell an investment, then it will become realized, then you have to pay tax. If your stocks are millions of dollars in your account and you don't still touch them, you pay no tax. But if you sell them, the consideration, 50% is going to be taxable. About tax losses that are incurred and are realized, I can tell that you can set them. Of course, you don't pay taxes. And the good news is that from 2025, if in 2026 you have some gain, you can carry over the tax losses from prior year against tax gains in current years, which means that you can reduce your tax gains and your gains, so you will be paying less taxes. So whether you have loss, whether you have profit, hopefully I would say positively tax laws are supporting us. So only 50% of your profit or your capital gain is taxable, and that will depend on your employment income and business income and personal income. That is a, but TFSA, imagine you open TFSA. Each year you only have maximum $7,000 Canadian dollar to put into that account. And just opening TFSA doesn't mean that, oh yeah, my money is growing. No. You open TFSA, and TFSA is an investment vehicle. And through TFSA, you guys will start investing. Okay, now from TFSA, I will buy Tesla. Now from TFSA, I will buy gold. Now from TFSA, I will buy this and that. So if your money will grow, I don't know, in the next years, and you can also add each year up to $7,000, Nobody is allowed to touch this from the taxation perspective. At any time from the TFSA, you can withdraw. You need money, withdraw from your TFSA. It is okay. Nobody is telling you anything. Nobody is going to tax you anything. And it is the most appropriate investment vehicle for students because $7,000 per year is a logical amount that students may have depending on their budgets. Because I see that most people say, oh, I don't have money, I don't have a balance in my budget, which is okay. So let's focus on tax-free saving account. Whether you do it in the bank, whether you do it on your own through Wealthsimple or other platform. So we can start any questions or anything?
Can we beginning with $1 for stock?
Well, I would say let's not put your $1, precious $1, because we need a lot more money. Because $1, of course, you can buy, we call them blue chips, right? There are some stocks with the price less than $5, Canadian or US, it's okay. There are many, I can search for you. They are a small cap, they are called a small cap. Yes, you can start with $1, yeah. You can start basically with any money that is available for you. And again, I'm telling you, because some of you are thinking, okay, maybe in 6 months I'm gonna leave Canada, maybe in 1 year I'm gonna leave Canada, maybe in 2 years I'm gonna leave Canada. Still 6 months or 2 years is a meaningful way. But some of you may say that, okay, I've got some concerns. I don't know about my rent, I don't know about my liability, I don't know about my credit card debt and this and this and this, so I need to wait. Well, totally fine, because it is your single life decision, okay? I'm not asking to follow me or follow anybody else. I'm asking you to follow yourself, follow your needs of investing. But I'm sharing you at the same time a very important fact that there is no retirement life waiting for you guys. I'm gonna share this article in the next few days on my LinkedIn, and then asking people that, okay, we got the worst retirement crisis here in Canada and in all countries. Retirement, good old days, my grandpa or dad is like enjoying. Yeah, we are not working and then we are receiving pension from the government. But the bad news is like living in Canada, to get the pension, at least you have to work. Well, when I say at least, it's like a meaningful, do you know maximum pension? Do you know how much is a maximum pension in Canada? Like government of Canada is paying maximum on monthly basis, paying to old people, do you know? 2,500, 2,500. 2,000. No, that's pension. I'm talking about CPP, not talking about EI or something. Or old age security, no. I'm talking about 2,000. And what you guys can do with 2,500? Pay rent, pay my grocery in 2025. Hello, I said, value of this money is gonna go down. 30 years later, you are thinking of, okay, voila, I'm just in Canada, so, or back home country, I don't know, wherever, I'm not gonna get retired. So, government, give me my money, where's my money? Because you deducted taxes. I paid all the taxes. I paid everything. So, they say, we are sorry, we cannot afford your retirement. Oh, you want to fight with government? I don't think so. So we gotta make a decision today in this class, right? I'm asking you not to invest, I'm asking you to think. I'm not asking you to invest, I'm asking you to open your eyes, see what is going on financially in your life. Because your age is a golden age. Your age is the golden age to make fortune in the next decades or so. You can be in touch with me through my Telegram. On daily basis, I'm sharing market insights, money management tips, and also you can directly ask me some questions. And also, if you have a LinkedIn account on the right side, you can also. Through my website also, you can read some articles and insights. and then get in touch with me at any time through LinkedIn, through Telegram. You can send me any message. Your issues, your doubts, your problems, budget, money matters, banking in Canada. I'm a man of numbers and a money man, so whatever is regarding money, I'll be able to share with you. Is there any question or doubts we got? In terms of risk management, in terms of your fears, like what company to buy or sell, or how long is my long term, or
Then if we want to start to invest today, what do you think? What do you recommend to start? Like which kind of companies?
like what company? What company? I would say I never say what company you guys have to invest in, because this is your choice. And at the same time, I'm not asking you to go and then study the market, because for $50, for $500, it doesn't worth for me to read the financial statements and then the news. But you saw those companies that I showed you. These companies and other companies that you heard by far their names, we call them, they are fundamentally strong. Fundamentally strong. So let me share with you something quickly from the business perspective. Before I invest in any company, I will take a look at some factors. Factor number one, their product. I will see the profitability and viability of their product. Tesla has a very attractive product. NVIDIA has a very competitive product. Microsoft has a monopoly, great monopoly. So all these products are so attractive, are so viable. I will take a look at the market share. How much Microsoft has the market share? How much Tesla has the market share? How much NVIDIA has the market share? How much those other big giant companies has the market share? They have great market share. They are exercising oligopoly or monopoly here. Again, I take a look at the industry. So product, market, and then the industry. Industry means that how they are competing with the other competitors. Okay, Microsoft, basically no competitor. Tesla, a little competitor, but they are not a strong competition. Because the technology-oriented the product is, the less competitive the product will be. So these are my factors. So if you ask me, I would say, okay, I got $100, I got $200, definitely I would go for either NVIDIA with a great price because it is down for the past 2 months. Microsoft is down enough for now to just do it right now. NVIDIA is good. General Electric is good. Goldman Sachs, GS is good. GEV is good. General Electric, Vernova is good. So these companies are good because they are fundamentally strong, which means that you and I can rely on their long-term, stable long-term growth. And last lesson. If I pick a company like Apple, if I zoom in, because we always zoom in, because human always zoom in, say that, oh my God, I see a lot of fluctuation over here. I'm so afraid. I'm going to lose my money. I'm not going to get into capital market. What up? What is this? And I'm going to tell you, hello, it is like your life. You just zoom in, you get confused. You are so engaged with the daily life, you get bored. But hello, will you please zoom out and see the music? And see the music. Isn't it beautiful? So this is your job. My job is fluctuation on daily basis. Forget about my job. Your job is this. Your job is to invest here, is to invest here, is to invest here, is to invest here, is to invest here. And then don't touch it. And just add it, and just add it, and just add it. Add $50. You don't need to weekly add it. No, anytime you got money. Okay, 6 months later, I got $100. Okay, add. Another 6 months, I got $500. Okay, then add. Today, I got $50. Then add. So then your money will enjoy this long-term symphony, which is beautiful. So this is the last lesson. Do not please get yourself engaged with the daily fluctuation. Oh gosh, no. Invest and then let that go. Those self-made investors, billionaires like, well, Benjamin Graham or Warren Buffett or Neft or else, they started investing from a very early age, consistent, they took risk, and they just let that go. Let the money grow for itself. I promise today, what date is today? No, November? 5th December, I'm still in November. 5th December 25, that if you don't afraid of taking risk, calculated risk, managed risk, and if you invest early as possible, every single of your dollar, I'm sure that in the next few years, you will call me, Sina, yeah, thank you so much. My money is now this much. I'm happy to share with you here. I'm not asking you the commission to pay me at that time or just buy me a coffee. I would say, yes, you listened, you woke up, and then you did an action. You did an action. Any question?
Yep. I want to know the negative of this way because you always say the positive. So, and if, for example, people, the company always scared of the red graphs.
Yeah.
So, if everyone knows the graph is down, we didn't sell it. It's always go up. It will go up in the future. But why people prefer to sell it when I don't know the risk in here?
That's a great question. First of all, when you see a sell-off, we are retail investors because our capital is just 1 million, 100,000, 50,000, 2 million. This is not impacting this huge. It is big companies that have the share of Teslas. We call them institutional investors that they like to play with the market price. That is why we say prices are manipulated. I'm not going to talk about this right now because that are the limitations of finance for the whole world. But when it is going down, imagine that you and I are hiking up steady to the peak. So don't you think that, okay, we sometimes have to rest and refresh and then move on? So this is like this. You know, in order to get the peak, you need to sometimes rest. You need to sometimes refresh. You gotta take a break and then move on. And for us as a retail investors, every single deep or red for me is like, jump into market and start buying it. Make sense? I'm not just doing it because I'm gonna sell over here. I mean, as a retail investor, no, I'm gonna buy and then I'm gonna wait. It is like, I'm gonna buy, I'm gonna wait. Because I'm so held sure that I will get over here. I will definitely, certainly get over there. So, people see opportunities, like smart people see opportunities in challenges. If it goes up, for me, something is wrong. I never invest. I never invest in a sharp, steady upward trend because something is wrong. GEV, look at that. I'm going to show you. Look at this beautiful. Look at this beautiful. This is the spin-off of General Electric. sometime May 2024. I purchased this when it was almost $100 because I read their annual reports. I knew what was going on, so I invested because I was confident with General Electric, and this was a child of General Electric. And so you see my reward today is more than $600. And hello, less than 2 years. I did it with a calculated risk. I never put all my eggs in GEV. Actually, I put a lot of eggs on it. I put a lot of guts on it because I told you I'm a risky man. I'm not asking you guys to. So you see, it is resting. You see, it is resting. You see, it is resting. So what you guys are gonna do, it is like go and, as I said and shared some names with you, like find like a good one. Yeah, Netflix. I told you 5 minutes ago that Netflix 1 hour before I come over here was $99. Now it is 108. Hello? It is like while I was talking with you, my money is growing on Netflix. Almost $10. Have I taken a shovel and did the ground? I was just here, spending time with lovely people, right? My money is growing. So I'm telling you to be wise. Like still Netflix, after it's a split, is just offering, buy me, buy me, buy me, buy me. Because you see, Netflix has always been profitable. Always been profitable. It's amazing. This is amazing. Yes?
What is the smartest way to turn limited saving into significant long-term wealth while keeping the downside risk and under control? Because if you are a beginner, you don't know what is the risk and you don't know how to.
So I said, I said if you are afraid of, or for the beginners, if you are afraid of, so you can consider the whole market. You can buy SPY, you can buy SPY. SPY follows 500 largest American companies. So as you can see, historical data, and you are investing not in one company. Your money is split over 500 largest American companies. So that will be an answer that somehow in long term, let's say 6 months to 2 years, my, let's say $1,000 saving, instead of not even enjoying 2% from the Canadian banks, let's say putting it into a flow so it can grow sensibly. So it will grow some percentage, let's say 20%, let's say 15%, let's say 10%. Whatever percentage returns you receive, it is above inflation, which at the end you may say, yes, I beat inflation finally.
If I have, for example, I put my saving and in a stock, and after for don't paying tax or something, I can pay with that stock or stock, or I have to just move it to my bank account and after today to pay my daily.
I will ask you one question. Why you are saving your money? Because you may some needs in the future, or maybe for emergency purpose, okay? So if it is for emergency, please don't touch, because that is for emergency. And I got no idea in 5 minutes later what is gonna happen for me. So for emergency, we don't put that in investment. I asked you earlier that if you have something in excess of your emergency fund, even $50, start investing. So we don't say, I'm gonna invest my saving. No, 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 no. Your saving is good. It's okay. You can still add that, basing on your needs. But if you have a purpose that, okay, my money is supposed to grow, not with 2%, with a meaningful percentage, Then you can just put whatever is in excess of that in the capital market.
And you have a time what you can invest there, or doesn't matter?
Again?
If you invest, for example, if I'm investing $1,000 today,
Right.
and how long I have to leave them there? I have to have a time, or
That's a question, and the answer is with you. Because long term for me is 10 years, 15 years, 20 years. Long term for you is different. But 6 months is not long term in the context of investment. 1 year is not long term in the context. Also, 2 years could be long enough a little bit to see the result, but I would say if you don't need your money, because investment is the money that you and I do not need. If you want to buy a house from your saving, don't invest. If you want to buy a house in 2 years, don't invest. If you want to buy a car in 6 months, don't invest with that money. After you bought the car, because you have a plan, I'm telling you, because earliest I said, before you invest a meaningful money, you need to have a plan, you need to have a budget, you need to have a roadmap. You need to know what I'm gonna do with the money that I have. Then I will decide for the investment, because investment is for the money that we are not gonna check, we are not gonna touch, we are not gonna withdraw for a meaningful length of time, like 2 years or even more. And then we are gonna add, which means that I don't need that money too. I don't need that money too. I don't need that money too. So I can expect some growth. Yes, please.
If we're just like kind of beginners, or in some points we can just start to buying like some stocks or maybe start investing some money, but in some point we're gonna have to getting like more information and maybe like as you already know to become like an expert. So what is like the best ways to start like studying this field, or maybe if I don't have like too much information about it, like about financial literacy, where are like the best places where we can find this kind of information?
Yeah, the information you guys as a beginner to investing can find on YouTube's, because there are so many articles, there are so many videos, there are so many. Well, I can share, but all you have to do, like you have to look for is like how capital market works. What is a stock? Why a stock market fluctuate? Why a stock price fluctuate? You can ask GPT, you can watch YouTube. And also I can introduce some books like Common Sense Investing, like Intelligent Investor. These books are in a dummy words and also good for beginners. I love the Intelligent Investor. I love the Money Mindset, the book. I love the Compound Effect or Impact, I don't remember the book. These books are building my fundamentals and my mindset towards money itself and towards investments.
And how much do you recommend like these kind of books, let's say like Robert Kiyosaki, Graham, Brian Tracy, that give you some literacy, but it doesn't showing you like this really side, it's still being helpful for you?
For Kiyosaki, he has a few great books, and those great books are still in 2025 working. I recommend to my money management classes or my finance classes that like Rich Dad and Poor Dad or cash flow management, or he wrote something about fake something. Those books are like a wake-up call. Like they are still not in particular about investing, but you will gain a knowledge like how I can think about money. What is the difference of me being employed and me being a business owner and me being a self-employed or me being an accredited investor? So he explains in his books. Yeah, those books are really great. Yeah. So into those channels, I shared some folders like Google Drive. I have some PDF over there. You guys can then join and then drop me a question, and then I will share with you the link. Like some videos and some links for beginners to go through and then learn about investing and else. Thank you so much. Thank you so much for coming.
Yes, that allows such a thing. So I think so majority of students enjoy how we start investing as a student. Okay, so this month is, as I told, that accounting fundamental. Basically focus how create a value for your money. Clear? We are working with numbers, facts and figures. So again, thanks for accepting my invite, Sina. And
My pleasure.
presenting lovely session for my students. It's a great opportunity for the morning classes students because
My
evening classes students, I'm pretty much sure you may deliver these things day
I'm
by
already
day, day by
torturing them
day.
every single day. Yeah.
Every single day you try to change their mindset on how to create the value for the money, but morning class students
Yeah.
will be missing.
Yeah.
But today you create the value for the morning class students too. So thanks for accepting inviting and presenting your whatever the knowledge with the students. Guys, I think so there are two QR codes here. If you need to know further how we can do the investments, because as in I told that the main fact is risk. Main thing is risk. Clear? So even you have $50, you can start. Okay. So thanks for coming for the session. So have a great day, everyone. Okay.
Have a lovely weekend, everyone. Thank you so much.
Guys, please,
All right.
Yes.
Hello. I wish I'd attended the whole thing, Sina.
Yeah. You missed
I
a lot,
really-
Martin.
I'll tell you something. I don't know how old you are. I'm 58. Okay. If I had been as mature as him when I was 25 or 30, I would not be working today. Right? Take
That's a point.
this day very seriously. All right. One of my very good friends, his name's Ryan. He's 58. Okay? He's 58. His name's Ryan. He lives in Alberta. Ryan is a multi-millionaire. Multi-millionaire. Do you understand what I'm saying?
Mm-hmm.
And he always made the same amount of money that I did. But he's a millionaire because he took the time to learn how to invest. $50, $100, $25. He started when he was 25. And today he's a multi-millionaire, right? It's just a habit. Just a habit. An hour a day, 2 hours a week, 15 minutes here, read an article, read a blog. I promise you, I beg of you, I beg of you, I beg of you, do it. Right? And it will change your life. It's just a habit. You all go to Starbucks, you all go to Tim Hortons for 15, 20 minutes. Do this, whatever he told you to do, 15, 20 minutes, and it will change your life. All right? So you're the man. Thank you for doing this. I think that we should have like an investors club. I think that we should start a club here, and maybe we have it. I don't even know.
Definitely.
Yeah.
I already got it.
Okay.
Start setting it up.
Yeah, we should set something up because this is a life-changing day. So